Trade deficits and surpluses are meaningless statistical artifacts that in and of themselves mean nothing. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. Back in the 1960s, when Hong Kong was under British control, the civil servant in charge of the economy, Sir John James Copperthwaite, famously refused to compile certain economic statistics because they believed they would lead to officials meddling in the economy, doing more harm than good. When asked what countries should do to promote growth, he replied they should abolish the Office of National Statistics. Copperthwaite's free market policies, low tax rates, low government spending, less regulation, and more free trade were crucial in turning Hong Kong from one of the poorest economies in the world into one of the most prosperous. His advice on statistics is especially relevant now. The focus on our trade deficit is a prime example. It is leading to considerable mischief. Such a number is no measure of an economy's health here or anywhere else. It is manifestly not the equivalent of a company losing money. The U.S. has had trade deficits for most of its existence. It routinely imported more than it exported in the 1800s as the U.S. became an economic colossus. We had trade surpluses during the catastrophic Great Depression when unemployment reached 25%. After Ronald Reagan's economic reforms in the early 1980s, the U.S. trade deficit grew as the economy expanded. All of us routinely run trade deficits. Forbes magazine has had deficits with its paper suppliers for over a century. Consumers do the same when they shop. What determines prosperity, as Sir John noted, is indeed low tax rates, sound money, responsible government spending, and minimal regulation. Certain misunderstandings get in the way of understanding trade. Too often, our trade number deficit leaves out services like finance, entertainment, and certain high-tech services. Service exports come to over $1 trillion a year. Our surplus, almost $300 billion. Trade numbers include the buying and selling between American companies and their overseas affiliates, which is healthy. They ignore that the patterns of trade can distort reality. Trade numbers include the buying and selling between American companies and their overseas affiliates. Trade numbers ignore the patterns of trade that can distort reality. Singapore's imports look huge because they're often the first stop and their final destination in other parts of Asia. The same is true of the Netherlands for imports for other parts of Europe. They ignore the sales of stocks and bonds to foreign buyers. Related to that, they ignore the trillions of dollars foreigners have invested in the U.S. economy. Foreign capital has played a crucial role in our growth and will do so in the future if we get our economic act together, which we're starting to do in the areas of regulation, government waste, and hopefully soon, taxes. After World War II, we learned from the disastrous protectionist-ridden 1930s the need for reducing barriers to generate growth. As Adam Smith taught us, trade is not a zero-sum game. Each party gets something from the transaction. By systematically reducing trade barriers, the U.S. and the world prospered as never before. Trade is taking a bum rap for certain woes. Trade didn't have government damage manufacturing with obscenely excessive regulations and high taxes, or burden us with excessive government spending, or an unstable dollar, or rules that bog down getting proposed projects like building a bridge actually done in a timely manner, or letting China get away with stealing our intellectual property, or unfairly treating American companies there, or aiding the flow of fentanyl into the U.S. Trade doesn't prevent us from blocking investments that harm our national security, or similarly blocking security-sensitive exports. Nor does it prevent us from pursuing trade agreements that reduce barriers as we've been doing for decades. We can't avoid trade numbers the way Sir John could, but we could see them for what they truly are. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and look forward to being with you soon again.